Hello everyone, and welcome to the third UK Investor webinar. We're very excited and delighted to have you joining us here this afternoon. I'm Zak Mir. I've been associated in one form or another with the UK Investor Show, I think, for 20 years, but we don't want to talk about that today. Otherwise, I'm a technical analyst, and I like interviewing CEOs, which is a strange thing to do, I suppose, but I find it fascinating. I'm also delighted to be joined today by Leon Coetzer, who's the CEO of Jubilee Metals, Colin Bird, Executive Chairman of Xtract Resources, and Gabriel Grego, Managing Partner and CIO, Quintessential Capital Management, who will be joining us later. At any point, if you, the audience, have a question, please write it into the Q&A chat, and we will try to get to it. First up, I am, as I said, going to introduce Leon Coetzer, CEO of Jubilee Metals. Jubilee Metals Group PLC is an industry-leading metals recovery business focused on the retreatment and metals recovery from mine tailings, waste, slag, slurry, and other not very savory sounding parts of the world, but other secondary materials generated from mining operations. The company is expanding multi-project portfolio across South Africa and Zambia, provides exposure to a broad commodity basket, including platinum group metals, chrome, lead, zinc, vanadium, copper, and cobalt. Jubilee's shares are traded on the AIM market of the London Stock Exchange and the South African Alt X of JSE Limited. Welcome, Leon, after all that. How are you today?
Oh, thank you, Zach. No, very good. Thank you for the introduction.
Yeah, I was enjoying the waste, the slag, and the slurry. It sounds wonderful. Very glamorous the business that you're involved in. I take it you don't actually go in there with your bare hands and get the material out.
Well, I suppose that's the beauty of it. At least we can see it, touch it, and feel it long before we have to process it. Unlike mining.
Right. I mean, you had a great update on Monday, which I'd like you to just briefly touch on, if you could. I think that would be useful, and then that will sort of get me into the questions and the points that maybe we can go into.
Oh, thanks, Zach. Yeah. So why we actually provided the update on Monday, we as a board decided to just bring out a operational update post all the impact COVID has had on the industry at large, on the countries that we operate in, and to give a sense to our shareholders and investors where Jubilee has come to. What is this? What's the new platform we've set for operational performances, for our revenues, for our earnings, on the back of a 4-year period of intense capital investment. And that's really what motivated us to bring it out on a quarter results, which we normally do every 6 months. But it's the first quarter we've really come out of COVID. All our operations are running at full capacity. And it was a nice manner in just indicating to the market where we've come to. So yes, the results are particularly good. Our platinum, palladium, rhodium businesses are doing really well, pumping nicely. In this quarter, our results, financial results for the quarter, has already exceeded the financial results achieved for the previous 6-month period. And that 6-month period was a record high for the group already. And it was a growth of 6 months after 6 months for the past 3 years the group has seen. So it was very nice to bring out those results. A few things stand out in those results that we might just touch on. Beyond, of course, the operationals of the PGM side that are doing really well. PGM prices are good. Platinum, palladium are doing well. Rhodium is doing well. So the earnings are particularly good. Margins are very solid in that operation. The other key component to it that we highlighted in that announcement was just, again, to take a quick step back and explain. In South Africa, we take what is mostly chrome-dominant ore and material. We extract the chrome and then recover the PGMs. In our previous results, our chrome operations, although revenue picked up in our chrome operations, our margins were particularly thin. And we informed the market a couple of weeks back that we've successfully restructured our chrome operation and entered into long-term ore supply agreements with very large companies that supplement, as you said, slags and tails and all the nasties, and bring in quality ore into our operations. And we've done that by also growing the chrome margin. So beyond making your money off the PGMs, the material actually creating that feed, we've grown that margin as well in chrome. And that's really why the results, in our view, is so strong, such a great indicator of how the things are coming together for us. On the one side, our ore supply agreements, supplemented by our tails, quality feed coming in alongside tailings at surface, and the earnings as we delivered, 15 million pounds of earnings in 3 months, I think is an exceptional performance for a group like us.
Well, I've got a lot of questions here, so I'm not sure we're going to get through them all. So I just want to one thing from myself, because obviously I'm the most important person in terms of asking the questions. Your output, and it's basically, so let's say it's a metals recovery company. It doesn't sound as rock and roll as a mining company, let's say. No. The difference between you and a mining company is, and correct me if I'm wrong, a mining company, there's a risk that there might not be what you're looking for in the ground when you actually get into the ground. A mining company has a limited life, let's say, as well. But it seems to me that you've actually got you're a safer bet. And in many cases, you'll be producing more product or resource than most mining companies. But the market regards the riskier play, let's say, as more, maybe they rate mining companies higher than they do a producing metals recovery company, even if you're producing more than 90% of mining companies. Do you see a sort of a problem in the market's way of looking at things?
Zach, excellent question. I think there is an education that's slowly happening in the market. I think Jubilee, because we are pioneering a lot of this approach, the whole concept that you are producing metals that is typically mined from a company specializing on processing material already at surface is an industry that is yet to really establish itself properly and educate the market on the fact that this is an extremely large industry and the potential to dramatically grow as companies realize that what they regarded as waste over many, many years and produced many millions of tons of this material actually can be turned into value. And you're spot on correct. If you just look at our chrome operations, we are going to produce probably more than 500,000 tons of chrome concentrate over a 12-month period. That's bigger than most chrome mining companies. Yet we haven't got one miner. I actually have to qualify. We have one miner on our whole payroll, and that's our chairman. And that is the essence of it. And you're quite right. The difference between the two industries are the fact that we can go on surface, we can pick up the material, we can test it to death. You know it is there. You are not sinking a shaft on the extrapolation of drilling and geologists to try and sink most of your capital just to access the material. Our capital is actually sunk into processing the material because it's already there at surface. Dramatically less risky, although saying that, the ability to do it profitably and sustainably depends on your metallurgical processing skill. And that's where we as Jubilee took a very different approach. If you look at our development over the past years to arrive at this position, we heavily invested into developing process techniques, testing process techniques, profiling waste materials to ensure by the time that we design and build a process that we know it's going to deliver the results. And that's why when we extrapolate and tell the market what we're pursuing, and then when we deliver the results, they are so close to one another because of that preparation work that's gone into it. Because you can de-risk these projects a lot because there's no mining component exposure to it at all.
But the irony is the market is almost rating risky companies or companies with massive potential capex and non-producing companies more than giving a bit greater value than yours.
It is very, very true, Zach, and I think that's education is going to come through as the market sees that the margins we make, the sustainable, repeatable earnings we are delivering is so much more guaranteed as such than, as you say, these high riskier, better known investment areas. I think through the education, and Jubilee being one clear example of that, the market will see and learn the kind of returns companies like us are able to deliver on a sustainable basis.
It'll be interesting in a parallel university called Jubilee Mining rather than Jubilee Metals. So that would be interesting to see what the share price would be there. Unfortunately, we'll never know. I've got, as I said, lots of questions which we'll try and just get through to keep everybody happy. In a recent RNS, it was indicated the target chrome output is 90,000 tons per month, double that achieved in the Q3 figures just released. When is it expected that this target might be achieved, and what needs to happen from now on to achieve it?
Excellent. Yes, that's very much a target we have set out there. We're currently capitalizing yet another chrome recovery facility to enlarge our capacity. That capitalization program will come to an end over the next 3 months as we ramp up our capacity to absorb all the material we are contracting. We're at a point now where, on the back of the efficiencies we've achieved in the chrome industry, we're setting exceptionally high standards for chrome recoveries. We are oversold on capacity. The group, and expanding that capacity as we speak now.
Okay, could you please explain exactly how the ultrafine chrome facility fits into the operation at Inyoni, and other than producing additional chrome concentrate, the target amount, how will it help to improve the PGM output? When will the rebuilt ultrafine chrome facility come online?
Yeah, there's two knock-on effects that brings. So just for those who don't know what those terminology actually means, Jubilee pioneered a process to be able to pursue chrome particles well smaller than what the industry typically was able to recover. And that created a lot of the waste. We were able to successfully develop, implement, and run commercially such a facility to target that ultrafine particles. It's why it's called an ultrafine chrome recovery plant. What that does for us is we are able to take out more chrome for every ton of material either mined or every ton of material we lift from surface, which of course helps with margins, earning margins, and dilution of overhead. Its knock-on effect on the PGM side is quite dramatic, because you're taking out mass in chrome out of your feed stream and therefore presenting to your platinum plant cleaner feed that's got less chrome but more PGMs in, and therefore you are both reducing your cost to operate your PGM plant, and you're also expanding artificially your PGM plant because you're no longer presenting mass to it that it cannot recover, which contains chrome. It's got a double effect on that.
Is there any further news about the upgraded PGM tailings at DCM? The questioner is suggesting that you were saying that it was imminent, but nothing's been heard of since.
Yeah, sure. So on the Dillicon side, which I just explained there, that is a tailings resource where we've run through the fine chrome recovery plant. So it is the classic example of where we've removed the maximum amount of chrome out of the material and therefore are presented with quite a high quality PGM asset. And that asset, we are currently in that process. We've been hampered in the past by coming to an agreement with the department on allowing us to commence processing. There's a various environmental and legislative requirements to secure the allow us to process, but we expect that to be concluded within this quarter.
Is there any, in the light of the Zambian government's debt repayment moratorium and planned forgiveness refinancing program, does the company have any concerns about the marketing, sale and repatriation of funds from its upcoming Zambian production?
Yeah, no, we're in close contact with government and various levels of government. No, there's no foreseen challenge on those areas at all. We've been successful in securing full term sheets for the capitalization of our facilities in Zambia. We have a very strong 3-year capital program going into Zambia, and there's absolutely been no talk on the ability to both repatriate earnings through in the country, nor any impact on our ability to produce and the saleability of the product. Copper is a very well traded and sought after commodity, supported by a multitude of various funding groups.
Where are we with the already processed tailings that are lying in situ over at DCM?
Where are we?
They're valued at, they're supposed to be valued at 20 million by Colin, so a substantial amount. We were promised an update a few months ago about transporting and processing.
Yes, we gave that update. So as we said, we are waiting, and hopefully in this quarter, we'll resolve whatever requirements we need to commence with that project.
So that would be quite a substantial.
It's yet another building block. I mean, when we look at our PGM industry, where Dilacon fits into, we have initiated a number of areas in our company that has two effects. On the one, it is continuing to be able to grow our platinum, palladium, and rhodium output. And the second big strategic initiative we are driving is to extend longevity. So to extend beyond 10 years our foreseeable earnings coming through from that industry, because it's such a large contributor to our company. Our performance has been exceptional in that area, and both those strategies are being driven quite hard. On the back of that, we've indicated to the market, we as a board have approved the expansion of our Nyoni plant, which is our largest PGM facility. And of course, the knock-on effect of our long-term feed and ore supply agreements is that our PGM plant, equally beyond the tailings we already own, we have a long-time continued feed supply to our PGM facilities beyond our own tailings we already own.
Right. Just going into the different copper or oxide sulfide, how do they impact the copper circuit at Sable? What has been put in place to ensure any JV delivery of ore doesn't impact the processing plant?
Okay, so just to explain again, the question for many that might be a bit technical is that the copper that we typically receive in Zambia, or copper in Zambia in general, are either sulfide or oxide associated, or a mix of both. And therefore, in our processing design, we had to ensure that we are able to address and recover both copper oxide associated and sulfide associated. So for us, we are fully flexible to be able to process both. Our Project Rowan, which is the first to come on stream, followed by Project Elephant, which is the second to come on stream. Both those projects address both oxide and sulfide ore recovery. Our refinery in Zambia, which is currently producing copper cathodes, has the front-end circuit, which we told the market on Monday. That capitalization program has been completed. We've commenced commissioning of that facility, and it goes into operation now over the weekend, which enables us, again, to produce a copper sulfide concentrate, high quality, as well as a copper oxide through our leach circuit for our cathodes. So we have to address both.
Yeah, just we've already covered Tiate. Any progress on that asset sale, potential asset sale?
Well, Chart at the moment, we of course, as Colin and ourselves on the board, with platinum, palladium, rhodium being so in focus at the moment, we have a few negotiations, but discussions on the go from interested parties looking at gaining access into a platinum or palladium, rhodium project. And those discussions are continuing. And as soon as we have more traction and to be able to give the market clearer indications or guidance on potential transaction outcomes, we'll do so.
The Kabwe project, what's the status on that?
Well, the Kabwe project, we're now with COVID over, the fact that our engineers can travel in, we have recommenced the construction of our zinc circuit. Again, to explain, so the Kabwe project, which is executed alongside our current copper refinery, will include zinc, lead and vanadium. The zinc circuit, which is the first phase of that project, that construction has recommenced now that we are able to travel across border following the COVID lockdown.
In view of the recent very good quarterly results, to what level does the company need to see financing for the copper project in Zambia? I.e., the project ratio has been changed as we've got more money in the kitty.
Oh, sure. So basically, in essence, what it means is on the back of these earnings and repeatable earnings, as you see the last half year and now the quarter, we are able to negotiate very aggressively favorable terms with banking institutions to support the capitalization of Zambia. That's the biggest thing it does. It allows you we've used it to settle debt in the group. To give you an indication, over the last 12 months, a company like us, we've invested more than £30 million into capitalized projects, capitalization into our group for our sustained growth. So that really is what these earnings allow us to do, is we are building 2 plants in Zambia. We are expanding a PGM plant in South Africa. We are expanding our chrome operations in South Africa, thanks to the level of earnings we are generating at the moment.
This is maybe a rhetorical question after all you've said, but what other project is the company looking to bring online as we now are in a positive cash flow position each quarter?
Sure. So, just to explain, yes, Jubilee has gone through an extensive capitalization program on our PGM side and our chrome side. We are not stopping. The level of capitalization for the South African operations are, of course, much lower. It's expanding rather than buying or building brand new facilities. But in Zambia, as we've said, we're building 2 facilities in Zambia over the next 2 years. But very importantly, we have not stopped as a group to acquire more and more access to surface tailings. As we speak, already as announced, as Jubilee, we're sitting with more than 170 million tons of copper tailings already secured in Zambia. And as we said before, our target is to extend that. We are eagerly chasing down nearly 200 to 280 million tons of copper tailings to bring that onto our portfolio. What that ensures is that our copper strategy in Zambia has a 20-year life, at least, just on the tailings, never mind the third-party ore we're processing. So we really are, to get back to your very first statement, changing this perception of waste and tailings processing from being a short-term strategy to actually being a long-term, very sustainable industry that we're entering into.
So, just to give a final, if you were a mining company, would you be a mid-tier one with this kind of production and this sort of mine life, this kind of pipeline and timeline? Would you be a medium-sized company? Would it be, would it be a sort of? I mean, how would you compare with existing mining companies that maybe people have heard of? Is there with that level of production, what would be the typical market cap, and what would it look like?
Interesting question. So if you break us down, on the chrome side, we'll be in the top 4 chrome producing entities. That's how big we are in chrome. On the PGMs, the way we are growing, we're going to break into the top 6 PGM producing groups.
It's actually in the world. This is actually in the world.
Right. This is worldwide. In copper, when we reach our 25,000 tons of copper per annum target, which we've set to reach in Zambia, we again are breaking into that top 10 tier. And so we are medium to large in some of these sectors that we are operating in. And I think as soon as people realize we are breaking into those kind of quantities on a sustainable manner, they'll realize the true value we are releasing. If you look at our earnings growth as a group, half year on half year, having double-digit growth, and if you just look at the last quarter results, you could expect another significant jump in our earnings for the next 6 months. That's all just South Africa. That hasn't yet brought into the numbers any earnings from our copper side, which is now being implemented. On the copper side, we have a refinery running and ready, expanded, front end upgraded, and ready to take on the material it's getting. Simultaneously, we are building 2 copper concentrating facilities, which jointly will fill more than the capacity we've built on this refinery. That's what copper brings, in addition to what South Africa is doing and continue to grow in South Africa. So that's the potential that's being unleashed. And with all of that, the key is the resource that feeds that has been secured as well, upfront, with the cash the company is generating.
Well, I mean, I'm worn out just listening to the last 25 minutes. I'm sure that you're worn out talking about it, but it sounds like a big, this is a busy operation. Is it scalable? Is it something that could be scalable going forward?
Yeah, absolutely. When we started off just with one PGM plant, we had to address that question, got a lot from our investors. And today we've scaled that dramatically. Our chrome, to give you an idea, we only started off initially at 15,000 tons of chrome per month. And as you said, soon we'll be hitting 80,000 tons per month of chrome concentrate. The copper strategy is absolutely scalable. We have got every component of what the largest copper producers in the world will have. We have a resource, we have concentrators, we have a refinery. To scale that to the size of the largest copper producers is highly scalable. And to put it further in perspective, everything we're doing as Jubilee, we've only touched 2 jurisdictions mining jurisdictions so far, South Africa and Zambia. There are still South America, there's North America, there's Australia. There's so many more mining jurisdictions where this philosophy is and can be implemented and scaled, as you say. All we're doing for now is choosing 2 jurisdictions to demonstrate the sheer magnitude that you can achieve just on those 2.
And of course, it's a pretty green activity. That's the other final thing. I'm not Mr. Woke myself, but it is by definition a green activity. Does that make sense?
Yeah, I suppose mining is not, the greenest of industries there are, but very much so. A very key component of what we do as Jubilee is of course, rehabilitate the past. It's a very key component of what we do. We implement a zero effluent policy, so we don't create any effluent. If you look at our before and afters, where Jubilee is involved and how it looks 3, 4, 5 years later, it's unrecognizable. The area where we operate, because of the large rehabilitation and because you're taking old historical waste and you are redepositing into new modernized sealed facilities. So very, very big component of what we do is rehabilitation.
Well, on that note, imagine green fields and savannah and that sort of stuff. Leon Coetzer, CEO at Jubilee Metals, thank you very much indeed.
Oh, thank you, Zach, for the opportunity.
Okay, well, hopefully waiting in the wings, we'll have Colin Bird relatively soon. We can see where he is at the moment. I'll just introduce him while we're waiting. I hope he turns up. Colin Bird is from Xtract Resources. He's a chartered engineer and a fellow of the Institute of Materials, Minerals and Mining with more than 40 years experience in resource operations management, corporate management and finance. He's managed gold, copper, nickel, magnesite, sodium sulfate mines globally in various capacities for a number of companies. The last 20 years has been spent in natural resource corporate work, and he has founded and floated a number of well-known companies within the public arena. Xtract Resources is a company listed on the AIM market of the United Kingdom. It is involved in exploration, development and production of copper and gold. The company is producing cash flow currently from the Manica project in Mozambique and has plans to expand the operation to over 30,000 ounces per annum of gold. In Zambia, the company has the Eureka project, which will contain a small open pit, whilst the general Eureka area may host a much larger scale project. The company is in joint venture with Cape Verde International to develop dumps and carry out exploration in the Kalengwa area, former high-grade open pit. The company has recently acquired 100% stake in the Bushranger project in the Lachlan Fold area of New South Wales. Exploration should commence shortly. It's quite a story there. Colin, welcome. How are you doing?
I'm doing fine. Thank you for inviting me, and I'm fine, thank you. And you?
I'm doing fine. I'm still recovering from just the passive, just listening passively to all the work that Leon Coetzer does at Jubilee Metals has worn me out. But hopefully we can wind down a little bit with this conversation. Xtract Resources. This current situation is that I think that you had a recent funding. I think that's like the last major news for the company.
That's correct. Yeah, we had a funding, and quite a novel funding, really. We took in equity, £600,000, well, £620,000 of equity, and that was at market, which you don't see too often nowadays, Zach. In fact, you haven't seen for the last 10 years, I don't think. We did it at 120. That was big. And we put together a loan facility, which was staggered according to our performance, 40, 60, 80, with a forced conversion right for the company. And there's an extremely good reason, a very good reason for structuring it that way. First of all, I didn't want to go for a large equity package because of the unknown of the COVID-19, because quite frankly, I was really hoping there would be no equity for the company. There would be no new money requirements, since we would have our gold project up and running. The COVID-19 did, in actual fact, affected the major project. So certainly have a big equity raise. You can't, once you've done it, you can't give the money back and say, give us the shares. We worked what was the lowest we could get by on. And at the same time, for belt and braces, just in case there's a resurgence or God only knows what happens with this coronavirus, we'd got a facility to go to. And that's a staggered facility with hurdles, forced conversion, 0 coupon, and no security given. The company has given no security to the lenders. So yes, we did. I'm sorry, long-winded reply, Zach, but it was a kind of a long-winded financing with a lot of thought behind it.
Right. So with that money, what's the next steps? I mean, because you're a multi-focused company, and sometimes it's easy for people to sort of get their Manikas and their Kalengwes mixed up.
Isn't it just? Yeah. And well, what one's got to recognize when you're running a junior company, smaller cap in the resource sector, I suppose in any sector, or a big company for that matter, some things you have to do and some things you'd like to do. And we're at completion stage now, just waiting for the Governor of New South Wales permission. And we will be down in Australia drilling. Now that, you know, the way and the structure of the agreement was we have to drill. And so I secured the actual drilling component, the money to do the drilling, so that we can get the best out of that project. Not only get the best out of it, of course, but honour and do everything we were required to do contractually with Bush Ranger in Australia. And so we're going to drill down plunge. I think the first hole will be down at Porphyry, where at 160 odd meters, we recognise that the gold was increasing and copper was decreasing, but it was looking very, very nice. Copper gold project, and nice balance of copper and gold. And remember the old days of Sol Gold? I'm rather looking forward to that, you know, where we're reporting to the market of 800, 1,000 meters of continuing mineralization once you get past the first 50 meters. So not only are we obliged to do it, and I'd like to do it, I think our shareholders will be very happy once we've done it. So I made damn sure that that wasn't going to be scratching the bottom of the barrel. Nothing wrong with scratching the bottom of the barrel, but I did want to ensure that we got that long hole. It'll be 800, 850, might even be 900 meters long, Zach. So, you know, you don't do those sort of holes with peanuts. So it's to secure that, and we are, as you said in the introduction, bringing in some, you know, cash flow positive on our operation in Manica. So that will assist. You know, we sold some gold yesterday yesterday being last week, 4.5 kilos of gold. So that will supplement the treasury. Whether we draw down that first drawn depends on quite a lot of things. But we're secure for our drilling in Australia. We're secure for the additional production in Manica, and we're producing cash at the moment from our small alluvial operation.
Right, your copper gold. I just want to talk about copper gold first, in terms of just the overview and those particular metals. Copper in vogue now with the EVs, and you know, we're all going to be driving an EV before we know it, that kind of thing. And then obviously gold, as well as metals in general, hard assets in a time of stimulus of trillions of dollars and trillions of pounds. You know, people are looking to hard assets to invest in. So there's the demand side for metals, which is, let's say, copper, you know, and for the technological play of these metals, because technology tends to be driving these metals. And then on the investment side, people just trying to invest in anything which is nailed to the ground as well. How is that helping you at the moment in terms of your well, you've got more than one company, but how's it helping at least in terms of Xtract?
Well, I don't boast, because in that, you know, when his pride cometh before a fall, so let's all remember that. But I think it was sometimes the middle of last year, and probably even before that, that I recognized that the fundamentals for copper were extremely good. We've got a rapidly evolving third world, and the need, increasing disposable income, and the need for these white metals, cell phones, and everything what comes with it, and then the inevitable move towards electric vehicles made me a copper buff well before. In fact, you know, before we went to the coronavirus, copper was limping along at 5.52, 5.3, I think, Now it's about 6.7. So that fundamental has been in my mind, and the longer we languish, the bigger the problem is going to become. 2008, we was in some sort of a mining boom, and that was, to me, playing catch up for 25 years of underinvestment in the base metal industry. Let's broaden it to base metals. And then, of course, we thought we'd got through 2008. We became complacent, and for some daft reason, I don't know, is most of the majors decided they didn't want to explore, and they didn't anyway, but they didn't even want to spend money on joint ventures. So what was a problem in 2007 being corrected? As we sit here in 2020, we sit with stacks of copper projects which were shelved. We sit with an industry in Chile where there's a lot of social unrest. We sit with mines which are being developed where you've got to go 600 or 700 meters of pre-strip to get at 0.42%. And a well-known entrepreneur in the business said they're mining fresh air there down in Chile. And when you start getting to 0.4%, it does make you wonder a little bit. So I think the drivers have been there. The drivers have been there for some time, and the forecast is, what's the forecast? But something quite unnerving about that copper forecast for 2030. That they're in unison. The Goldman Sachs, the JP Morgans, the ones who know best, they are all consistent in their prognosis 2 or 3 years ago that copper the demand would double by 2030. Now, coronavirus, they've gone this way, they've gone that way. The coronavirus is a blip. Mankind's evolution is going to go on and on and on. The demand side is going to increase, and even if it's only 50% more by 2030, I, for the life of me, don't know where it's going to come from, Zach.
So, do you think there's going to be an inflection point in terms of, obviously gold's going to be nudging $2,000, copper is bouncing, is heading higher. Do you think there's going to be a time when, these metals really start accelerating and the shortage, a proper shortage kicks in?
Well, let's always divide gold from copper, because gold has no demand fundamentals. It's triggered by triggered by misery, upset, and fear. Whereas copper, the demand is going to go up, and we're actually seeing it now, 6, 7. And those who forecast prices for this time next year are talking 7, 5, 8. We're already on there. Greta going around the world making all the noise about the environment, the electric vehicles. It's made us look at the satellite. The satellite images of the world where nobody went to work has shown up the world. The world can be cleaned up. So the momentum and the impetus for electric vehicles is going to be startling. So I've got no difficulty in forecasting 7,500 copper. And the previous speaker was talking about his plans. He hasn't got to mine that copper. He's got the infrastructure in place, the dumps in place, the plant in place, and then every dollar over 6.55 goes to his bottom line. So copper is a good place to be. Gold, I try not to forecast gold, but I think it's found its new place. We've got the great debate now between Trump or Biden. I'm not sure. There are those who are saying that Biden will depress the gold price. That's not necessarily so either. But gold, political tension just doesn't go away with a new leader, and nor does demand. So we've got new drivers for gold as well. So my own view is that to be in gold and copper wasn't too bad a choice, but of course it didn't happen in response. We're not an ambulance chaser. As a company, across the board too, in the companies I'm involved in, copper and gold play a major role. And quite frankly, I will have got it wrong if that isn't the case. But everything I see, Zach, at the moment says Xtract is extremely well placed to take advantage of the copper price and the gold price.
Right, I've got a couple of questions which have just whizzed in for you. We'll see whether you can say pass like mastermind if you need to, I suppose. First question is, can you please try explain why Xtract has such a low valuation compared to its peers, given the fact that the company is on the cusp of production and a possible free cash flow of around $500,000 a month? The current market cap of 7 million doesn't even compare to a number of AIM-listed junior explorers.
Well, that's right, and I don't actually class the company as an explorer. I call the company a developer stroke explorer. I think the market has been phased. Do not like the fact that the Fairbride operation is in production. That was going to be the big earner, and of course it's been delayed by Corona. Yes, we're making money from alluvials. We bought on additional alluvials and 3 million gold capability, but none of that equals the capability of Fairbride. So the market, I think, is somewhat disappointed that Fairbride is working, and so am I. And I'd like, if I may take this opportunity, I'm going to blame myself here, Zach. I think I probably presented the misconception. The misconception is we're ready. But all those big pieces of plant and the tower crane are down in South Africa. That really doesn't explain the situation properly. Is that, remember, we get a 23% interest. Another company is building this project and financing this project. And when the coronavirus broke out, put yourself in their position, which I'm quite able to do. Would you be creating a whopping great tailings dam and employing all the cash to do it? Would you be doing a big pre-strip of a new open pit? Both of those situations are cash consuming, and there won't be much change out of $5 million. So I guess they were waiting for the border to open. But this is sequential thing. It's nobody, our contractor, our partner, and the confidence. But what I can say is those contracts are being signed. Those contracts are less lead time. But I'm so happy that they're being signed, and you'll find out that the group, the Zimbabwean group, will be digging, pre-stripping the mine. They will be doing the tailings dam, and for the larger earthworks, for the leveling of, well, the larger earthworks, quite a few have been done, but some of the earthworks for the plant will be done because they've got the excavators. And quite frankly, we look like, Monica at the moment, looks like a warehouse for moving equipment. All the equipment's moving onto site. So anybody, shareholders, and I hope shareholders are watching this, who think we're just waiting, boy, we're not waiting. There's a lot of equipment there now. A lot of pre-work has been done. We're ready for the off, and we'll certainly be ready for that equipment, because the opening of the board has given the contractors the confidence now to really spend, contractors, partners, to spend the really, really big money. So that coming in will give us the market recognition, or, I guess that we're always in front of the market. The fact that the market, when we put the announcement out, the market realizes everything's underway. The money in anticipation of the earnings will hopefully come to the company, and the market cap will respond. The market cap should respond to that very positive all. Now, it will be positive. What a statement to make on a show like this. But assuming that all is as positive as I say it is in Australia, the market has to react to that sort of all. And the other things we're doing also should make the market react. Disconnect, yes. Being fixed, yes.
But isn't the answer, let's say if I was Colin Bird Jr., wouldn't the answer just be when the production comes in, the valuation of the company will look after itself, because it's literally if you reduce X amount of ounces, you have X amount of earnings, and that means X amount of market cap. It's just literally waiting for the production to come through. Market cap can just be is really just a function of production.
Yes, if we're a sole producer, but your Beaker can lead to quite a large mine. The Kalenga expansion can lead to something quite bigger. And then we've got what is one of the world's major porphyries, which has already got a resource, 2012 JORC resource, with 77 million tons in it. And so there's not many juniors who have got 2 or 3 production plays balanced by the real blue sky. And I say real blue sky, I'm not, when we're talking bush ranger, surrounded by operating mines. So a real blue sky exploration project, which has got 77 million tons already. Anglo American have got a call option to buy 80% of it. So it's what explorer goes into a project with it pre-sold if it makes the grade. So all in all, it's a lovely portfolio. It's a nice balanced portfolio, and yes, there is a disconnect between the market cap and what the company may have to offer. Bit of under delivery, Colin. I'm always beaten up over under delivery and forecast. I'm so enthusiastic that sometimes I upset the market. But I really have been knocked over a bit here by coronavirus. So there would have been no placing, and the company would have been producing.
But you've got a situation where the assets are not really being. I mean, we see with other companies that they can just say we've just bought this particular bit of land, and we think there's gold underneath it, and the market goes wild, and there's a 10x rise in market cap. So you don't get any of that. You don't get any of that sort of sizzle. You're just getting, whatever people are waiting for the results before they give you the valuation. Is that? And that's
quite simply, they're saying deliver, Colin. Let's see you deliver. And of course, 6 years ago, they were saying the same about your previous company. And I was promising that it would be a mid cap, and it's on its way to a mid cap. Our industry, Zach, is a dinosaur. It really is, and sometimes it's a sod to get it moving. But provided the dinosaur's nose is pointing in the right direction, it does help a lot. So this dinosaur of Xtract will move, is moving, is going in the direction, and we really have got a very, very nice suite of assets.
Yeah, the other question, which may be slightly controversial, is the question that the questioner is asking. Given the relatively poor perception of the company, have you considered changing the broker to attract a new type of investor and that sort of city-leaning face that you have?
A good question. It really is a good question. I've been through it all, and probably a lot of people on this call have been through it all. I've been to the drawdown facility of about 4 or 5 years ago. Everybody wanted to kill one certain company, but I personally think that company saved AIM, and then the drawdown facility got very unpopular as our sector became a little bit more interesting, and then we went into the classic what shall I call it, heavily marked down financings, and that became very unpopular. We all know my brokers are. We shouldn't name them on this show, I think, but brokers are brokers. They've got a job to do. I don't think by shopping around London to change them, I'm actually going to lift the spirits or the fortunes of the company appreciably. I look on the brokers. It's a bit like a lawyer or a mining consultancy. It's not the name above the door, although the name above the door is okay by me. It's the consultant you get, it's the lawyer you get. And again, I've had very good service from the people therein, and good advice too on a lot of occasions. So we're not ready for institutional broking. We're in the retail broking sector, and I don't really see any need to actually change that broker at this stage. Served us well. We're still in business. We've got a good basket full of projects. We've got belief therein. And no, I don't see a real need, because at £7 million, the institutional investors aren't really interested. We're a retail company for the time being. I think when we lift ourselves into a bigger earnings profile, then maybe we should look at the way the advisors of the company. But at the moment, I'm very comfortable.
Right, and so you're just saying it's all about the company, really. It's all about what's going on at the company on an operational level. and really the assets that you've got there and developing those.
That's exactly right. And it's a great suite. I wouldn't want to be a single project company, because if you can't deliver that company, that's the company gone. I wouldn't want to have a lack of focus, all over the world, because it's very difficult to manage it. So we're pretty focused in the part of the world. We know that part of the world. We've had success in that part of the world before. Because of the previous bad experience of it for Xtract shareholders, I didn't take full execution and financing risk for Fairbride. I kind of shared it in a collaboration agreement, guaranteeing our shareholders 23%, which I think was a cracking deal. Financing risk jobbed out, contracting risk jobbed out. We'll be the policeman of the project, but a 23% return in the markets we see on a 30 to 35,000 ounce gold project. I think our shareholders will be suitably, will be happy when that's delivered and up and running. And I look forward to it just as much. I was going to say more, but I can't look at their investors. They've got their hard-earned money in there. We all look forward to that day.
And in terms of going forward, the timelines going forward, let's say you've got you're focused on these let's say 3 major areas at the moment. What kind of company are we going to be looking at in 2 or 3 years' time, if that's the time frame that you're giving yourself now?
My time frame is shorter, unless we make another acquisition, of course, which refocuses the company. But my time frame now, and don't get mad at me, shareholders at home out there who are watching this, but my time frame now is by this time next year, we should be having earnings in excess of 650,000, which could be more if we brought the Eureka mine into production, which should be relatively easy. The last news release on that showed that we've got a pit extension of at least 150 meters. So that could add another 300. So we could be $1 million company by this time next year. And we could have a major discovery on our hands, which is getting towards the buyout production gold ounces and copper tons that the deal with Anglo, we're required to produce for the deal with Anglo. So I'm not pushing this time frame out 3 years at all. I'm saying that without another acquisition, it should be there by this time next year. Well, I've not done my job, Zach.
Right. So, and this inflection point from where you are now to the hockey stick of earnings, that could happen at any time in the next year. Is that right? If you're not in it,
we're doing it, Zach. I mean, as we are now, the alluvial and hard rock earnings from the pre-milling gold, I should get into a comfort zone, and that's all it is, a comfort zone of around about $250,000 a month. Bring Fairbride on, that should be good for 500. That's $750,000. And Fairbride, I 5 months. Where are we now? We're middle of October, November, December, January, middle of February, March. Nobody knows what the rains are like. They blessed us with 2 cyclones these last 2 rainy seasons, but we're inland and we managed to miss both of them. So let's hope that's the case this year. So the big one, if you like, Fairbride, and that's what shareholder expectation. It's not about this the comfort zone of a $200,000 to $250,000 a month coming in. They want the big earnings, as do I. They want the big earnings that will be produced by Fairbride. They want to see the company nearer $1 million than 500,000. That's what I want, and that's what I'm saying. It's not the death of 1,000 lashes. In a perfect world, it could be here by March, April, and then we look at the add-ons. We look at the add-ons of Kalengwa tailings, and we look at the add-ons of Eureka, which will take you to $1 million and $1 million beyond per month. And then, of course, I was going to say the wild card of the Bushranger project, but in actual fact, it's not a wild card. 77 million tons is not a wild card. It's a very, very good start. Some people will never have 77 million tons in their project. Open-ended on strike, open-ended down plunge. Last 3 boreholes showed quite good, very good gold values, and the copper values, if you actually combine them all up, to be a very competitive situation rising, as I say, akin to Sol Gold as it was a few years ago, in a district where you've got a mine, the Newcrest mine, tossing out $350 million of free cash flow a year, not so very far away. And everything in that area, we talk about market cap and disconnect. You know, if I tried to get that project now, Zach, wouldn't stand a cat in hell's chance. We really wouldn't stand a chance. Opportunity, it is the gold price, the copper price, a bad last end of year Australian market. The company struck. We managed to get this asset. Now, any other asset in that Lachlan fold, be it a new IPO, be it put into a new company, they've gone up 4 to 6 fold. We haven't received a penny of recognition for that yet, and rightly so, because you know when this company fires a borehole through it, comes up with that magic borehole that I'm talking about, then you'll give me the recognition. You'll give me the recognition when we give you much bigger earnings than we're giving you now. The question, I guess, is do you want to be in the club now with a market cap and a valuation of 7 million, or do you want to wait? And the retail sector, the analytical qualities are good, and I'm sure there are a few people out there saying, time to get in. It really is time to get some of this. And there are others who are saying, well, let's wait a bit longer. Let's wait and see. And I guess that's what running junior mining companies is all about. There are those who want it today, and we might be able to give it to them. And there are those who are taking a longer term view. And in the retail sector, a longer term view is obviously not going to be much more than 6 months. You want a return on the capital.
But we've seen almost, you know, it's been a year since March, since the COVID started. Almost every mining company has had its day. Every minnow has had its day. Let's say, don't be rude about it, but every small company has. Isn't it just inevitable, really, that in this market eventually there'll be a re-rate with Xtract? Not so much in terms of what's going on at Xtract, but just the rising tide. Aren't we in that kind of market, the rising tide market?
Yes, well, I guess in Australia, in America, the small caps are going, and the small caps are going in our market too. I think there's that recognition that commodities will have a run, will have a major run. It's quite remarkable. I just look at the screen and think to myself, copper at 6.7, and it was at 5.7, 5.5, 5.4 before coronavirus. There'll be a few log jams, I think, in terms of demand and ability to supply. So I think we'll see a fairly volatile market. I understand that the Chinese copper warehouses, they're empty and they're desperate, and we're seeing that as well, because producers who only produce a little copper, Geneva, the Chinese are after 2-year contracts to finance mining projects, unheard of at this level. So yes, you're absolutely right that I don't want to think this is a bubble. I want to go back to my comment of when I talked about 2007. That was the world paying catch up. Zach. The world was paying catch up for 25 years on investment. I don't know. We seem to have limped along from 2007 into where we are now, but the world is waking up. Copper, and it's driven by climate change. It's driven by third world development. It's been set back a little bit by coronavirus, but you've got to look, despite the sadness it's brought, coronavirus has a little blip on what is a rising tide of base metal demand. With the supply side, not at all certain because of the lack of that underinvestment that I've been talking about. Just to finish on that one, that I've seen it so many times in my career. This is sometimes a benefit in being old. It's difficult to find many. But if you actually look at the large caps, they decided not to explore 20 years ago. And they would buy the successors. And this pattern's been very, very similar. 2008, 2009, sack everybody inside. Anybody who moved, fire them if they don't produce. Head offices got much smaller. The cost structure, the money they spent on anything which was not productive, down. 2012, 14, hit a wonderful time, and then they started having great big dividend distributions. Then they put the fist up to one another, and who could give the biggest dividend. Then there were some acquisitions within the space. And now at that stage, and more so next year, right? Of course, the uncertainties we are, more so next year, the analysts at the JP Morgans and the Goldman Sachs will be saying, well, the earnings are good. They've cut the costs as much as they can. They've got some new capacity. But are these earnings sustainable? Where's the new ore coming from? And I've seen it, Zach. I've seen it 3 times. They turn around, they get that checkbook out, and they go out buying. And I want to have the companies I'm involved in the right place at the right time with something to buy. Not talk and not air, real assets ready for purchase by the majors. And if the Bush Ranger isn't one, then I've got this, then my career has been a bit of a waste of time. And if Manica is not going to be a bigger gold district, got it wrong too.
Well, we'll hope that the percentages are in your favor. Colin Bird, Executive Chairman at Xtract Resources, thank you very much indeed.
Thank you, Zach. Always a pleasure to talk to you, and this is no exception. Thank you very much indeed.
Right, final guest today is Gabriel Grego, who is the Managing Partner and CIO Quintessential Capital Management, QCM. QCM is a long-short equity fund based in New York City. It focuses on value and activist short investing and has built an impressive track record in identifying, investigating and exposing fraud and other corporate malfeasance. Amongst its notable successes, Quintessential short and exposed the notorious Globo PLC, Folly and Bion. These companies were confirmed frauds and delisted within days of QCM's report. QCM also exposed the Canadian cannabis company Afria, highlighting serious conflicts of interest within the board. The QCM campaign led to the resignations of 3 board members, including the CEO. Welcome, Gabriel. I'm a bit scared now after reading that out. I hope you haven't got a dossier under your sleeve for me. How are you doing?
No, only the crooks need to be scared.
Well, actually, that was actually going to be my first point. I think most of us would agree that we're in very over-regulated times rather than under-regulated times. Has the over-regulation or the extra regulation actually, do you feel that it's actually cut down fraud, or has it actually allowed more loopholes to come in?
Well, I mean, regulation, the way I see it, yes, I agree with you that it's becoming more and more of a burden, definitely for us as a fund, the anti-money laundering standards and, FATCA and CRS, in everywhere form, it is definitely getting tougher. I haven't personally seen much regulation which I perceive as being directed against fraud. So it's most regulation that deals with anti-money laundering or flows of money, but I haven't seen much regulation that deals with fraud. So they're regulating, but not the right stuff.
Interesting. So they're keeping the door open for crooks. I think the other question, which is something which I've seen on the AIM market here, the junior market here, is that yes, there are fraudsters, but actually I would say, let's say 60-40 or 70-30 in favor of people not being fraudulent, but just being totally incompetent. It's just that the lack of quality in terms of the management, and that, let's say, a clever person will think that a certain person's been a fraud, but actually they didn't know what they were doing, and they didn't know what they were saying, and they're generally that foolish or that stupid. Is that something you've seen, or is that being too gentle on these people?
Well, I mean, look, you do have a little bit of adverse selection in a market like AIM. The fact that you have a much easier path to taking your company public, of course, attracts smaller companies with a lot of promise, but also attracts companies that probably correctly predict that they wouldn't be able to list on a larger market. So you do get a little bit of adverse selection. In terms of incompetence, yeah, it's possible that there are some cases, maybe many cases of incompetence, but on the other hand, I think for a company that's not a fraud, for a legitimate company, they should see the AIM as a springboard toward eventually listing in some larger market. So as a springboard, it might also be a place where they have a learning opportunity, and if they have the potential, become better management. So I wouldn't be too harsh criticizing honest management, maybe because they're not that experienced, if they are listing their company in a smaller market. Of course, if you don't improve over time, then the law of natural selection should automatically take place also on the AIM market.
Right. And just on that particular point, the golden question, I suppose, is what is your favorite red flag? What is the first thing that attracts you to a potential situation? And maybe there's something. I mean, maybe I don't want to give away your secrets, but just is there a general red flag that you first, in your experience, that it says, all right, this company could be a problem?
It would be too easy if there were a single indicator that's all powerful and that 99% of the frauds have it, because then it would be too easy to spot them, right? And we all know that it's difficult to spot a fraudulent company. It is certainly difficult for us. It takes us a long time to find a good candidate, let alone to prove the thesis. I would say that rather than looking for the magic bullet, you should actually look at the pattern. So there isn't any single one factor, but there are many factors that when you see them existing simultaneously, then they increase the likelihood that something is wrong. So, and it's always the same, and there is no secret. It's basically usually a large discrepancy, unexplained discrepancy, and unexpected discrepancy between cash flows and earnings. Is a company that, for example, keeps performing well in spite of undeniable, powerful external impacts. So, for example, a restaurant company that keeps selling no problem during COVID would be a highly suspicious. Auditors, so the use of second-rate auditors, or lately it's not even only second-rate. I'm sorry to say, but some people could have said that using EY starts to be suspicious because a lot of frauds, high-profile frauds, were using them lately.
Yeah, the auditors, a second-rate auditor seems a bit of an oxymoron or something like that. I'm not quite sure what this. It's you don't need to say that. You don't need to have the first part of the second-rate thing in there, but.
Well, a non-Big Four auditor for a company that's capitalizes more than, say, $500 million, then it should probably raise some eyebrows. But even more importantly than the actual name that the company is using is the auditor changes. So if you start seeing, for example, we go back to what I said before about the pattern. If you see simultaneously a pattern where the company's financials start to deteriorate, especially the cash flow generation of the company starts to deteriorate in an unexplained way. And guess what? Right about when this happens, the company starts changing auditors and it doesn't have a good reason for it. Those two things together are very, very suspicious. And finally, and maybe that's the most important thing, but you can't always rely on it, people tend to never change, and the same patterns of behavior tend to endure over time, and crooks and fraudsters are like anyone else. They rarely change their ways, especially when they're dealing with public companies. So the presence of individuals, not necessarily the CEO and the executives, but maybe the board members, or even in the even external to the company, maybe the advisors, the underwriters, law firms. So any actor that's been associated with prior fraudulent situations in the past, the presence of a lot of these characters is a very big red flag, because the fraud needs an ecosystem in order to thrive. So it needs a law firm that helps them, that tells them how to do it and how not to do things, and it needs an auditor that signs the audit. It needs an underwriter that knows what they're doing. They're very promotional. And usually there is something which I call the ecosystem of the fraud, which are a number of parties which have enabled frauds in the past, and which I think will keep doing so in the future.
Well, I just wanted to ask you to focus a little bit on Quintessential itself, because that is an interesting thing to me, at least. I'm trying to place it in the market in terms of the long-short equity fund. Let's say the average person in the street's familiar with George Soros. They're familiar with maybe Elliott as an activist. They're familiar with Muddy Waters. There's sort of different players that most people may have heard of. Are you a mixture of those? Are you slightly different? Are you a specialist? How can we place you in the sort of ecosphere of these organizations?
On the short side, I mean, it's no secret. What we do is called activist short selling, and definitely I recognize Muddy Waters as being the pioneer in this type of activity. And what we do is very, very similar. Of course, everybody has their own style and their own nuances and to do things slightly differently. But what we do on the short side is definitely, out of all the people you name, is probably most similar to what Carson Block of Muddy Water is doing. On the long side, you know, the idea is even when you're making a lot of money and in highly successful short activist campaigns, these campaigns require many months to identify, manage, and deal with all the backlash that comes later. So we cannot do more than a handful a year. And so my rationale is why leaving all the cash, you know, without generating any profit. So the idea is while we wait between one short activist campaign and the other one, we either invest in highly opportunistic, high quality companies bought during uncertainty or fear, so when we can buy at a discount, or frequently we do some long activism, which basically means you look for a good company which is being poorly managed, and you pressure on management to do certain things to increase shareholder value or get out of the way. So this is pretty much what we do. We try to find synergies between long and activist short selling.
I think one of the aspects of this year to date is that, let's say, COVID should have been like a stock market killer, let's say, and the reality has been rather more complex. You've had, let's say, mining, tech, and biotech go through the roof, and you've had obviously the hospitality, etc., go the other way, travel, leisure, you know, head in the other direction, and maybe there's been some kind of balance between the two. In different markets, in different geographies, it's a different balance. Obviously, FANGs in the US have dragged everything higher, but this year you've got let's say, the opportunities on the short side, which obviously the fraud continues, and you know that those are there with tight, you know, people, you know, companies being stretched. On the long side, though, you've got some quite big names. I mean, you've got, I think today Marshall Wace went into International Consolidated Airlines, the parent of British Airways, and you're sort of thinking, well, they've put 140 million into British Airways. You know, good luck to them. Distressed situation. I mean, how do you work out whether there's value there or it's a value trap? I mean, must be even more difficult than finding. I mean, the fraud thing is probably easier than that, because if it's not a fraud, you know, it doesn't tick the boxes there. You know, you just step aside. But with the value situations, the value trap is legendary, even for Warren Buffett. I mean, that is the north face of the Eiger, isn't it?
Well, it's difficult if your aim is to get 100% success track record, meaning that every time you buy, you make money. That's actually what we try to do on the short selling side. But again, as you said it before, in a way, even though getting the information is extremely difficult, when you do have the right information, sometimes you know almost without a doubt that the company you're dealing with is a fraud. When you're going for a long value, long-term investment, you're dealing with what I call irreducible uncertainty in some respects. So the long-term developments of a given industry, or the long-term thriving of a company within that industry, very often depends on extrinsic factors, or depends also on extrinsic factors which are chaotic in nature and therefore cannot be predicted. So if I'm telling you, hey, this company is going to do well if the weather forecast is going to be good in the next 6 months, you know, you can try and forecast the weather, but you know that you cannot forecast the weather for more than a few days ahead, because there is the chaos theory, and this complexity cannot be reduced. Doesn't matter how powerful of a computer you have or how sophisticated are your models. You just have to accept that there is a margin of uncertainty, and you cannot do much beyond that. So sometimes that uncertainty helps and plays in your favor, and sometimes it plays against your favor. You're not going to go which one is what. But I think what Warren Buffett tries to do, and what any good value investor tries to do, is to know that even though you're not going to guess it right every single time, provided that you tend to buy with a margin of safety, provided that you tend to value a company with a consistent, rational method, which takes our uncertainty into account and gives it a proper weight, even though you're not going to get it right every time, you're probably going to get a statistical advantage, which over time will translate itself into higher returns in the market. So in that respect,
that's a different game to the shorting game, really, the long game. The long game is a percentage game, let's say. With the shorting, you just, you say, well, there's this tick, and this tick, and then that's it. I mean, there's no way that this could rise after that. I mean, slightly different game.
Well, I wouldn't so much say that the difference between short and long. I would say it's between passive investing and activism, right, both on the long and on short side. So what you're doing with activism that you obviously by definition are not doing with passive investing is that not only you recognize a situation where there is an inefficient pricing. So on the long side, the idea is, hey, this company is undervalued. Even if in the most conservative, rational way I can value it, the company is worth more. Or this company is overvalued. It's a fraud. It should be worth 0 and it's worth $1 billion, right? So that is the basis that's all the game in passive investing. And that is also the basis of activism. But the big difference is that while with passive investing, the idea is in the long term, the market will statistically correct that inefficiency so that the fraud will trade to 0 and the undervalued company will revert back to its intrinsic value. With activism, the idea is to make an effort to, rather than waiting for the market, you are the catalyst. You are the force that helps the market correct that inefficiency. And that is that works if you know how to do it correctly. That's why I think if you make a statistical analysis of the performance of activist funds, as an asset class, they tend to perform most likely better than the market and certainly better than their passive peers.
But is it the case that, I've been looking at this for 20 years, so I've got a long time, probably before you started. It's easy, from like a financial journalism perspective, a negative article on a company will always have a bigger influence than a positive one, especially in the small cap space. So it's easier to shake the tree on a smaller company than it is on a larger one. They tend to have better weapons in terms of law, PR and everything else. The larger companies, so it's easier to shake the smaller tree in that way, and that tends to.
Oh, yeah. I mean, it's the same thing with, if you're looking at physics, F equal ma. The second law of dynamics. So the larger the mass, the harder it is to move it. So with larger companies, you have a harder time. And it's both on the long and the short side. I would say that I'm not sure that I buy necessarily the thesis that it's easier to move on the downside than on the upside. It's certainly faster, but if you see a lot of frauds or even legitimate companies that have been, the price has been completely inflated and ballooned as a result of relentless pumping and promotional activity by management and by the underwriters. So in certain industries, this has become crazy. Like, for example, in the cannabis industry, where these companies have access to all sorts of magazines and televisions, and they control the forums and the social media. That's moving the price on the upside. It may not happen as fast as, say, a Quintessential short report, but it definitely matters. And unlike with a short activist report, you don't even have to be that truthful. As long as you're not too precise on the lies you're saying, and nobody's going to tell you anything. And in some cases, companies have been lying for years and on the upside, and nothing happens. But if you're on the short side, the enormous amount of scrutiny that you have from the market, from the company, and from regulators forces you to be extremely careful about what you're reading, and you have to be very close to the truth, if not saying 100% of the truth, because otherwise you're going to get in trouble. So I'm not sure that I agree with the premise or it maybe depends on the way you define easier. It's a different game.
Yeah. Okay. So basically, you're there on the short activist side and sometimes on the long side as well. The companies you pick, presumably you have some kind of algorithm, or you're scanning the market all the time for candidates, or is it done on a manual basis? How does that work?
Well, we have the algorithm, but the best ideas usually come either from for keeping track of past fraudsters or past fraud situations, and sometimes they come from whistleblowers or other funds that give us an idea. Sometimes it's long funds which they believe that something is wrong with the company, but they don't have the investigation capability to really find out what. And so sometimes they come to us.
And obviously this year there's been, let's say, probably the market surprised people in terms of, let's say, the durability of some companies. Very few companies have gone bust compared to what you would have thought. But are there any situations when you've got a short in the market and you just say, no, this is not happening, or the market, the stock's just going to keep going up? We think it's a fraud, but we're just getting out. We're just saying we surrender.
Can you repeat the question? I'm not sure I understood.
Are there any situations where you're short of a company or you think it's a fraud, but the stock's not going down or it starts going up, and you just say, the market's wrong, but we'll just have to get out. We don't want to lose our shirt. We thought this company was a short.
Yes. No, it never happened to us.
It never
happened to us. When we spoke publicly against the company, the stock price always reacted massively, on average around 80-90% drop within a few days. And all of the allegations were corroborated by official investigation or by the judiciary or by the regulators. So it never happens in our case, but it happened to other players, not to us, but it happened to other short sellers.
Right. Well, that's amazing. So it's like touch wood. We don't want that to happen at all. And then finally, I just want to throw a question to you from a viewer or a listener. A few months ago, you mentioned Gabriel mentioned he was thinking about different or new approaches that could potentially be used for shorting Chinese ADR, or for short Chinese ADR activist campaigns. Would he want to elaborate more, or I would understand if he does not? So on the Chinese ADR situation.
Chinese ADR are problematic. We looked at those very closely. In China, because these companies very often have, and we don't know for sure, right? But the suspicion is that these companies have some kind of the support from other fraudulent peers also traded in China. Some people have also speculated that they might have the support of the government. So what we've seen more than once is that a good thesis is presented by, say, some of our colleagues, and the stock price reacts, with a tiny correction on the downside, which is followed by a lot of, by basically an unexplained upward direction of the price. And we think this is the result of market manipulation. We think there is a concerted effort by the company in one way or another to manipulate the price in order to neutralize and even deter future short attacks.
Right, and a question from me, given your track record on the short side, which sounds obviously fascinating. If people want to sort of copy your homework, they do that just by following your reports, or how do they do it? Or do they invest with you? Is there a procedure there?
Well, we cannot solicit publicly. We are a hedge fund basically. So we have a set of investors which invest in our fund. Our funds are open, but they're only open to accredited investors according to the SEC definition. So we welcome institutional investors or family offices, high net worth individuals. We would like to keep the door open for everybody, but for regulatory reasons, we cannot do it.
You've got to be rich already, in other words, rich and a company or corporate entity if you want to join the party. Otherwise, they can follow your research and your tweets, etc. Is that right?
Yes, that's correct. We're on Twitter, qcmfunds.com. And our website is qcmfunds.com is website. The Twitter is also QCM Funds, and definitely everything we publish over there.
Right, and that's something that is that relatively timely, or it's sort of after you've taken a position, or is there a regulation in terms of that as well, that you you can't front run your research, or you have to wait, or what's the regulation there?
The regulation, of course, we cannot, of course, disclose any of the ideas before the fund takes a position. So typically, we take a position with the fund, and then we advertise the ideas publicly. But you know, I would say that if you look at every time we made an intervention, almost every time the company eventually went to zero. So even if you missed the initial 20, 30, 40, 50%, usually there is still money on the table if somebody's just following us. But again, we're not giving advice, so I suggest everybody does their own due diligence before they make a decision like that.
I'm sure they will, but it's a bit like being in the Assassin's, the little laser point of the Assassin's gun, but on the short side. But great to speak to you today, Gabriel. Hopefully we can speak after you've had a few more scalps over the next few months, if possible. I suppose after the US election, will be things may be more interesting even than they are at the moment in terms of the flux that
I'm sure it will.
And also, I suppose we've only had about 6 months of COVID, COVID times. Presumably, much more, companies have been able to sort of stagger on for a few months, but eventually, over the next 6 months, a year, it will be difficult. They'll be depleting their funds, won't they? I mean, that's the thing. I mean, there's sort of emergency money and stuff like that, but presumably there'll be much more on the short side from over the next year. Is that a fair thing to say?
Yeah, I would definitely, at very least, I would be very careful not to be long on any company that doesn't have a pristine balance sheet and that doesn't have some kind of business model that allows it to make money even in this kind of environment. With us, we don't care so much of what the macroeconomic environment does. Again, a fraud is a fraud is a fraud. It doesn't matter if it's a bull market, a bear market, or a social market. So we're not that much influenced by that. I would say that our colleagues that instead do passive short selling, definitely they might be more rewarded in an environment where the stock market is going down. But as far as we're concerned, it doesn't really matter.
Gabriel Grego, on that note, thank you very much indeed. Thank you for joining. I know it's a busy time right in the middle of the day in New York, so I'm sorry for that, but that's the time. That's the time. Sorry?
No problem at all, and thank you very much for having me.
A delight. Thank you very much indeed.
Bye-bye.
Well, obviously near the end of the talk today, firstly, thank you to Leon Coetzer, Colin Bird, and of course, Gabriel Grego for joining us this afternoon, giving us their great insight and answering the questions as well. Secondly, thank you to everyone at home for joining our third UK Investor webinar. We've another hopefully exciting webinar, and the link to join has been put in the Zoom chat now for you to register. That webinar will be on investing in property, which is obviously quite an interesting thing at the moment, featuring property guru Nick Leslaw in 2 weeks' time on the 28th of October, so don't miss that. We look forward to seeing you then, and hope you stay safe and stay well.